Hi, Howard Deal here with the General Agency, and I'm here with Ben Jones from Philadelphia American Life, and today we'll be going over their product. So take it away, Ben.
All right, perfect. All right, guys. So my name is Ben Jones. I'm an agent here with Philadelphia American. I'm also the owner of Revolt Healthcare Alliance. And so the search is over for an affordable, high-quality health indemnity PPO plan. So in no other industry is it tolerable for us to continue going up on cost and continue to go down on coverage and customer satisfaction. You know, we all deserve better healthcare coverage. So what we've done is we've taken a transformative approach to the current marketplace situation, and we've changed our strategy. And through education, smart shopping, we've been able to lower the cost as well as raise the coverage and the customer satisfaction. So up until 1995, health indemnity plans were actually the most popular plans offered on the market. Two-thirds of all employer groups actually had health indemnity plans until 1995. And the reason health indemnity plans kind of got put on the shelf in the meanwhile was because in 1995, they also passed legislation to kind of pigeonhole people into these new major medical plans. Now, what we call the Affordable Care Act, or as you guys can see, we call it the Unaffordable Care Act. Major medical plans through, Cigna, Aetna, Humana, these different companies. So now in 2020, we've really seen a big shift in the marketplace where people are actually fleeing these major medical plans because of the high cost and the very low coverage, if any coverage at all for most people. And they're fleeing major medical and flocking to our health indemnity plan for the financial relief and also the security that we provide. So I know not everybody really knows what a health indemnity plan is. So here's just a couple plan highlights here for our health indemnity plan. So number one, our options are very customizable. You can kind of pick and choose the different levels of coverage you'd like. We do utilize the largest PPO network in the nation, run through MultiPlan or PHCS. We have over 882,000 access points in all 50 states. So pretty good chance you're going to be a network when you're using our plan, as well as receiving all those different network discounts associated with the network. We do cover hospital stays. We cover doctor visits. We have preventative care. We have prescription plans, x-rays, lab work. So this isn't your old run-of-the-mill health indemnity plans that some people are offering as supplemental plans. We actually offer this as a full health insurance plan. So one thing we'd like to pride ourselves on here is complete coverage transparency. So we've got a list of pros and cons to our plan. So, of course, the pros, extremely affordable premiums. We save the average family between 40 and 50% on their current health insurance premiums when they switch. We have 100% customization of all of our plans. There's no standard one-size-fits-all. So we have our options between $250,000, $500,000, and $1 million per person per calendar year worth of coverage. We have our 1-unit, 2-unit, 3-unit plan, so kind of like a bronze, silver, and gold level tier. And then we have our deductibles ranging anywhere from $100 to $10,000. Okay, of course, the higher the deductible, the lower the monthly premium, and the lower the deductible, the higher the premium. So our income protection feature, that's another great pro that we have here. So being that we are a true health indemnity plan, any of your unused benefits actually get paid back to you as a policyholder. So some of the cons now, some of the things that aren't so great.
Yeah, Ben, back on that excess unused benefits go back to you and not kept by the insurer. That's where you differentiate yourself from other limited medical plans, correct?
Right. So that's exactly right. So, so some of the cons here, so not everyone's going to qualify for our plan. So individuals and families, they have to pass an underwriting questionnaire. So we don't have any lab work or blood work like some of the life insurance plans where they have to make you do a paramed. We don't have anything like that. They just ask you a series of health questions. But what we do find is about 8 of every 10 people qualify for our coverage. So groups are guaranteed issue if you have 8 or more people in a group. But some of the other things here is we don't cover pre-existing conditions for the first 12 months. So that doesn't mean we don't cover pre-existing conditions. I know there are other plans out there who say, hey, we'll just never cover the pre-existing condition if you come on our plan with that pre-X. we won't cover it. We do cover them. Just for the first 12 months, we have that exclusion. But after that first 12 months, we will start paying benefits on that. And the other thing is we don't cover natural childbirth. And so I'll actually get into that here on the next couple of slides for us. So first and foremost here, when it comes to pre-existing conditions, we always like to let people know, don't listen to the media. Think for yourself, okay? So this is a real-life example of one of my good friends, Mark. He's also my business partner. Mark is a 46-year-old male with asthma and high cholesterol. And so what we did is we went out on the marketplace and we found a Blue Cross Blue Shield plan. It's a silver plan. And so you can see Mark's premium for that plan would be $610 a month with Blue Cross Blue Shield. Keep in mind, this is going to be an HMO plan with Blue Cross. So he's paying $610 a month. His generic copays are $5. And his brand name copays, I mean, we don't even know what his brand name copays are going to be because it's a 30% coinsurance after he pays his deductible. So when you take all that into account, Mark's premium is $610. Luckily for him, he's taking 2 generic drugs. So he's just got a $5 copay on each. So his total monthly out-of-pocket cost here is $620 a month if he went with the Blue Cross HMO plan. Now, being with our plan, Philadelphia American, again, we use the largest PPO network in the nation. Mark's a 46-year-old male with asthma, high cholesterol. His premium comes out to be $288 a month. So his generic benefit on his prescription drugs is $20, and his benefit for brand name drugs is $40. So if you take Mark's premium, $288. Now, you'll notice his asthma medication and his cholesterol medication is not covered here. He's paying out of pocket $11.50 and $18.50 for his atorvastatin for his high cholesterol. So that's, again, because of the pre-existing condition when he came on with the asthma and high cholesterol. But when you still total all that up together, Mark's total out-of-pocket cost with our plan is still $317.98. So even though Mark has a pre-existing condition, he's still able to save right around $300 a month. So again, pre-existing conditions, not a big deal. Now, the other thing we really have to overcome here is our natural childbirth exclusion. So again, we tell people, think for yourself, right? So again, we went out on the marketplace and we found an example here for a 26-year-old female. You can see here with Blue Cross Blue Shield, her total yearly premium is just shy of $5,000. She has a $1,900 deductible, an $8,150 max out of pocket, which of course, if she's having a baby, she'll very quickly hit on Blue Cross Blue Shield plan. Now if she goes to the ER, she has a $950 copay that she has to pay to get in. Then she has an $850 facility fee to deliver the baby, a $200 copay to the doctor, and then the 50% coinsurance, again, she's going to be reaching that $8,150 max out of pocket with Blue Cross very quickly. And so her total pregnancy before the premiums is $10,150. So her total cost with the premiums is right at $15,142 for her to have this baby as a 26-year-old female. Again, we look at our plan here with Philadelphia American, same 26-year-old female. She pays $2,321 a year for her premiums. And so we looked up the lowest cash pay price in 2019 that can be negotiated by Cares 360. They're a patient advocacy group that we actually have included in all of our plans, was $5,934. And so I know a lot of people say, oh, well, this must be a rough area of town because they're only charging, $5,934. Well, no, this is actually in Southlake, Texas, when we looked this up. So her total pregnancy here for natural vaginal birth is $5,934, plus the cost of her premiums for the year. She's right at $8,255 to have a natural birth for this baby. And so if you see the difference here, we're still saving her thousands of dollars to have this baby. And so the number one question I get on this, well, what if I have to have a C-section? What if I have a premature birth and my child is to be in NICU? Something like that, any kind of complications. So we do cover all that stuff. Our surgical benefit will pay for the C-section. If we have premature birth and they've got to go to NICU, we pay our ICU benefits. So we do pay for all of that stuff. We just don't cover the natural vaginal birth, okay? So most common question we're getting here is, how are we doing this? how are we able to offer such affordable premiums and give such great coverage for our plan? Well, we found out that 5% of the population is driving 50% of all claims here in America. And then 20% of the population is driving 80%. So the old 80-20 rule. So the bottom 50% of the population is only spending $246 per year on their health care. Okay. So Philadelphia American Life Insurance Company, we specialize in underwriting that 80% of the population. So like I was saying earlier, that's why 8 out of 10 people actually qualify for our plan. We're really targeting those 80% of the people. Now, the other 20% of the people who are in that high risk pool who wouldn't qualify for our plan, it doesn't mean we won't help them. We'll definitely point them in the right direction as far as what coverage they'll need. So we're not just going to leave them hanging. So how much will your premium be? Here's a quick breakdown of what the price table looks like. So if you're 26 and younger as a guy, you're paying $146, 26 and younger for female, $151. If you're a 46 or younger female, you're looking at $235 and so on. Okay. And again, so if you're doing a husband and wife couple, you would just add these two premiums together and that would give you kind of a roundabout idea as far as what they would cost.
Okay. And these premiums were based on plan selection too, right? So, because you have a high and low, high, medium, low plan. Right.
So the premiums that I've got priced out here is actually the plan that we recommend. I would say 95% of all of our clients go with this plan when they actually take a look at our policy. So what we've got priced out here is actually our middle of the road plan.
Gotcha.
So good question. So here's a quick financial summary of New Era Life and Philadelphia American Life Insurance Company. New Era Life is the parent company to Philadelphia American. They're the 6th largest Medicare supplement provider in the nation. So you can see that the parent company has a total of $1 billion in total assets as of September 30th, 2019. So this is fairly recent, fairly updated here. And so you can see the market that we actually focus on is going to be the under 65 market. So you can see that we were at 110 million as of total assets as of September 30th, 2019. And so we've experienced a tremendous growth since September 30th. I'd venture to say that we're probably double our market cap for the under 65 market as of now, just shy of a year later. So this is actually going to be the brochure that we have for our gold plan. So you can notice that we actually offer this as a fixed benefit health and income protection plan. So we don't just offer this as health insurance, we also offer it as income protection. And I'll actually kind of get into that a little bit more as we kind of go through a couple of these benefits on the plan here. You want to go to the next page there, Howard?
There we go.
Okay. So at the very top here, you can see that we can design our gold plan. So like I was saying on the PowerPoint here, we can kind of pick and choose all the different benefit levels that we'd like here. But all of our plans are going to come with a lifetime maximum of $5 million per policy. Okay, which means that our policies are guaranteed renewable. We're not going to just drop you because you got a claim like a car insurance company or something like that would do. Okay. So we have our calendar year max benefits. It's like I said, we have $250,000, $500,000, and $1 million per person per calendar year. This does reset every calendar year. And of course, your agent will help you decide what's going to be the best benefit level of coverage for you here. And we'll also educate you guys on what we believe is the correct amount of coverage for you. Our benefit levels here, we have our gold value, our gold plus, and gold preferred, or our 1 unit, 2 unit, and 3 unit. So typically people will always ask me, well, what's a unit? I tell people, think of this like a bronze, silver, gold level tier, okay? The plan that we most often recommend is our plus plan. And as we kind of go through the brochure just a little bit here, you guys will kind of notice a couple different reasons as to why we offer the plus plan the most. I'd say probably 95% of all of our customers will actually go with this. And then we have our calendar year confinement deductible. So that's going to be one thing that really separates us and sets us apart from a lot of the other insurance companies that most people are used to taking a look at. Most people are used to having a Blue Cross Blue Shield plan where they've got to pay the first $6,000 to $8,000, $10,000 out of pocket before they get any kind of benefits whatsoever. Our deductibles do not work that way. Our deductibles are inpatient deductibles only, meaning they're only applicable if you stay the night in the hospital. Okay. So the deductible that we normally choose for our customers is typically going to be that $5,000 deductible there. Okay. So now, if you look just a little bit down the screen here, you should see the deductibles going horizontal across the screen now. And right underneath that, we have what we call our hospital admission benefit for first day inpatient. So what this is something very revolutionary. I believe we're still the only insurance company that actually has this benefit as of yet. And what this is saying is our insurance company will actually give our customers $2,000 towards their deductible if in the event that they actually have to pay this deductible. So really the true deductible on a $5,000 deductible plan is really only $3,000. So the reason that we actually do this, rather than just come out and say, hey, you got a $3,000 deductible, is this really gives our customers a lot of negotiation power with the hospital. I know a lot of us agents, we all understand that a lot of stuff is negotiable in this industry, but a lot of our customers don't realize that. So I always like to point that out to my customers. And my advice to my customers, if they ever do have to pay this deductible, is they can walk into the billing department, or when the lady or guy comes after the procedure they had in the hospital with the billing department, you can tell them, hey, look, either I can set up payments of $25 for the next X amount of years, or I can give you $2,000 cash right now. Well, 9 times out of 10, we've seen that the hospitals are going to be willing to take that $2,000 lump sum and call it even, just for the fact that the number one issue that hospitals are having is actually collecting on these deductibles. They would much rather take the sure thing of getting $2,000 versus someone setting up a payment plan of $25 and then maybe only paying for 9 months, 12 months, 18 months, something like that. But still, worst case scenario, you only have a $3,000 deductible here. Did you have a question, Howard?
Yeah, I was going to ask. Can you hear me now? I don't know if you can hear me now. Maybe have a little bit of a delay. But the question is that so if I bought the $5,000 deductible, and then I had the $2,000 a year or the $2,000 per year inpatient benefit, so that $2,000 is going to pay for the $2,000 is going to pay for the part of that $5,000. So basically, it's just $3,000. Correct.
Correct. Yeah. So worst case scenario, they're really only going to have a $3,000 deductible here.
Okay.
Yeah. So, and that's really the reason that we like to go with the $5,000 deductible. It helps people get their premiums down, which of course everybody's in the business of saving money. But it also gives them that extra $2,000 check that'll actually help them along with their deductible. So it gives them a lot of negotiation power with the hospital, and we've seen that one be the most fruitful and successful deductible that people have liked. So,
okay.
But yeah. So we'll go over a couple of these benefits here. I'll kind of cherry pick a couple different ones for us to go over here. And so first thing I want everybody to know is, as we go through this brochure, you guys will notice it's very broken down into all the little charges they're going to charge you for, whether it be the hospital, the facility, the doctor's office, what have you. So you see our plus, you see our value, our plus, and our preferred plan. We're going to be looking at everything down the middle column, in that plus column down the middle. And so that first thing you see there, it says confinement in a hospital as a result of a covered injury or sickness indemnity benefit. This is going to be your hospital confinement. I typically will tell all my customers, I like to think of this like an all-inclusive resort. When you're paying for your all-inclusive resort, what you're getting is all the food you're eating in the actual room you're staying in. So the national average, based on the Kaiser Family Foundation, they're the largest hospital facility in the U.S. I believe they're based in California. The national average for hospital confinement is actually $2,424 per day. So you can see the reason we don't typically go with the value plan. Your customer's going to be very upset with you if they end up in the hospital and their plan's only paying $1,500 per day for their hospital confinement, because that means they're going to be on the hook for the rest of that every single day times X amount of days that they're in the hospital. So that's really the reason we look at our plus plan here. It's paying $3,000 per day. So this is how our income protection feature actually comes into play here too. So if let's say that we go into the hospital and they're billing us the $2,424 and our plan's paying $3,000. What that means is the hospital will get paid their $2,424 that they're asking for. And then that extra $576 that we didn't use actually gets paid back to us as policyholders. So again, you can multiply that times 3 or 4 days, however many days you're in the hospital, and they'll actually send you a check for that in the mail. So, you know, we believe the Plus plan has plenty of coverage. The Preferred plan, I typically tell people it's very overkill on insurance. What I do see, though, a lot of times is people who are saying, hey, I'm paying $1,800 a month for Blue Cross Blue Shield, and I'm still only paying, you know, $900 to $1,000 with the Preferred plan. I would rather have over coverage and still be saving $800 a month. So we do see that happen kind of often, but the Plus plan is actually the one we typically recommend. So the next benefit down is our confinement in a hospital's intensive care unit, the ICU. Of course, being the ICU, it's going to be more expensive. You can see we're paying more for ICU, okay? So now we'll kind of skip down to our outpatient radiation therapy, chemotherapy, or immunotherapy benefit. So this is actually going to be our cancer treatment. And typically on this benefit, I'll usually tell people, even our value plan is typically going to have enough coverage for us on this. Couple good examples. Number one, my dad actually had prostate cancer probably about 5 or 6 years ago now. And when he was going for his treatment, he was going to the most expensive place here in North Texas at the time, which happens to be in Plano, Texas. And every day he would come in, they would charge him $700 like clockwork. So even our value plan would have had plenty of coverage for him on this. But being that we're looking at our Plus plan, it's going to be $1,500 every single day. You go in for radiation, chemotherapy, immunotherapy, what have you. So we actually have a real life example here. Howard, do you want to pull that image up for us?
Yeah.
Okay. So this is actually a real life example of one of our customers. His name is Gary. So Gary actually had stage 4 esophageal cancer. Esophageal cancer is considered a specialty type of cancer here in the U.S. And of course, being stage 4, it was the most aggressive form of cancer too. So you can see that Gary actually went in for his cancer treatment on October 25th. He went in for radiation treatment here at Texas Oncology in Flower Mound, Texas. And for that day, the total bill was $545 for his radiation. So now you can see right here, this is his network discount of $136.25. And so his total charge for that day was $408.75. So if you look right here, you should be able to see the total payable benefit was $2,250. So the reason that it was $2,250, Gary was one of those people, he was coming off a Blue Cross plan. He said, hey, I'm saving so much money, let's go with the preferred plan. So his total benefit for his radiation every day was $2,250. So you can see the total payable, $2,250. So you can see right underneath that, paid to the provider was the $408.75 they were asking for that day. And Gary's total net benefit, or what we call his excess indemnity benefit, was in the amount of $1,841.25. So you can see that the bottom half of this image here is actually a check that the insurance company made out to Gary. And I believe we have like 28 or 29 checks, all totaling up to be about $60,000 in overage checks that Gary received when he was undergoing the treatment until he unfortunately passed. But you can see they took care of Gary in his time of need. And not only did they take care of his cancer treatment, but they also sent him any of that overages. Okay. So again, that's really how our income protection feature works. Does that kind of make sense to you, Howard?
It makes good sense. And actually, that's one of the features that I really like about your plan is that you pay back the members if they bought a plan that was basically over what they needed. Yeah.
Right. So, and that's why I like to tell people we are a true health indemnity plan. So some of these other health indemnity plans out there, they say, oh, well, we pay up to this amount. We actually pay the specific benefit, whether you use all of it or not. We pay it. We'll pay whatever the provider's asking for, and then any of the extra stuff will always come to you as a policyholder.
Right. Yeah, very good.
So now we'll look under professional services here. We'll look at that surgery indemnity benefit.
All right, give me a second. Let me go back to the brochure here real quick. Okay, here we go. This all right, here's where we are. Okay, go ahead.
Okay, so under the surgery indemnity benefit, so this is going to be our surgical benefit. So you can see we pay 1 time, 2 times, or 3 times the current RVRVS. So RVRVS, for people who don't know what that is, it's a fancy acronym. It stands for Resource-Based Relative Value Scale, fancy acronym for Medicare Schedule of Benefits. So what we're saying here is we pay 1 time, 2 times, or 3 times what Medicare will pay for surgeries. So I actually got a really good example for this as well. One of our other agents here, his name is Scotty. Scotty's needing a total knee replacement. So the only reason Scotty hasn't had his total knee replacement completely done yet is because of the coronavirus, everything being shut down. They're not doing any kind of surgeries like that right now. But in the meantime, we went ahead and priced up what Scotty's total knee replacement is going to cost. And the total cost of that surgery is going to be right at $21,000. So what we did is we cross-referenced his benefits for the Medicare schedule of benefits. And Medicare will typically pay $15,400 for that surgery. Well, again, being that we're looking at the Plus plan, we pay double what Medicare would pay, meaning we're going to pay $30,800 for that same $21,000 surgery. So again, our income protection feature, Scotty's going to get his whole knee replaced, and then the extra $9,800 that's above and beyond that cost is going to get paid back to Scotty as a policyholder. And Scotty's already started going in for some of his imaging and things like that. And he actually sent over a bunch of checks yesterday in an image to me and said, hey, man, I can't believe I'm already getting paid on this stuff and I haven't even got my surgery yet. So Scotty's extremely excited. And I told him, I said, look, the only thing I'm asking from you is you take me out to Perry's Steakhouse after this and you get me a very nice steak and some nice wine. So, yeah, that's how our benefits are going to work as far as on the surgery. And then the next thing down there is our inpatient pathology and radiology. Now, this is going to be all of our inpatient imaging, things like MRIs, PET scans, CAT scans, X-rays, things like that. We all know when it's done on an inpatient basis at the hospital, they typically like to charge a little bit more for it. So again, we're paying double what Medicare would pay for this stuff as well. Now, next thing down here is going to be our assistant surgeon surgical service indemnity benefit. This is going to be our surgeon assistant. So oftentimes this will confuse a lot of people when they see this benefit. They see that it says we'll pay 20% of the surgical benefit payable, and they think that means we're only paying 20% of what this guy costs, but that's not the case. So typically, Howard, I'm sure you know this with all your years experience of being in the industry. Normally, the way that surgeon assistants are going to bill you is they're going to bill you a percentage basis. So anybody out there who's ever had a surgery, anybody who is thinking about having surgery, you're going to find out that the way that they bill is you'll get a bill from the surgeon, you'll get one from the facility, you'll get one from the anesthesiologist, you'll get one from the surgeon assistant. They all have their own bills. And so typically the way that we're seeing the surgeon assistant's bill is a percentage basis. So on average, we're usually seeing it about 50. It's going to be usually 15 to 20% above and beyond the cost of the surgery.
Okay. So
to make math easy, I usually use the example of a hernia repair surgery. The average cost of a hernia repair surgery is typically about $10,000. And so the initial $10,000 you're seeing being billed is going to go to both the surgeon and the facility they're using. Now, if they use a surgeon assistant, which hernia repair surgeries typically do, they're going to bill you an extra 15 to 20% typically above and beyond that cost for their services. So an extra $1,500 to $2,000. So what we're saying here is we're actually going to pay on the higher end of that just to make sure we got them covered for you.
Right, and that's
okay?
that's on all the plans.
Now, that's going to be on all the plans. So now, if you're on the Plus plan, it's going to be 20% of the surgical benefit payable. So if we're paying double what Medicare would pay, this is going to double that benefit as well.
Right.
Okay. So if the normal Medicare rate for a hernia repair, let's just use the normal Medicare rate of $10,000. The surgeon assistant, we're paying 20% of that, which would be $2,000. But being that we're looking at the Plus plan, pays double that. So it'd pay $4,000 for that surgeon assistant.
Got it.
So you should have more than enough when it comes to that as well.
Yeah.
So same thing goes for the anesthesiologist. These are the people that put the medicine in your arm to either make it go numb, put you to sleep. Again, typically they're charging 15 to 25%. So same thing. We're paying them 25% on the high end just to make sure we got them covered for you too. Okay. So we'll go to the top of the next page here. And again, I'll kind of cherry pick some benefits from here as well. Okay. So that first one there says physician's indemnity benefit. These are going to actually be our doctor visits. So each covered family member will get 20 doctor visits per calendar year, 6 of which can be chiropractic, 2 of which can be specialist. And we're going to pay $120 of these doctor visits. So normally I'll actually use myself as an example on this one. I know that my doctor only charged me $75 when I go see him. So what happens is, just like any other insurance, you walk in, you hand the insurance card to the doctor, to the people up front, I should say. And what happens, you go back, you see your doctor, get everything you need, you walk out. They bill the insurance company the $75. So the insurance company will turn around and pay the $75 back to the doctor's office that they're requesting. Now, the extra $45 that I didn't use would actually get paid back to me as a policyholder. So as crazy as it sounds, I would actually be making $45 every time I saw the doctor versus paying a $35 to $50 copay every time I go with my old Blue Cross Blue Shield plan. So now it does work in the other way as well. So now let's say that my doctor was charging me $125. Well, then my out of pocket, of course, would be $5 here. So typically we're seeing them bill about $75 to $80 here in Texas for just a standard run-of-the-mill office visit. Now, of course, if they get into doing lab works or anything else when you're there, then we pay additional benefits for that as well. And we'll get down to that in just a second. So now, like I said, we do get 2 specialist visits per person per calendar year, and we'll pay $150 for those specialists. And so most common question I get on the specialist part is, well, what if I need to see my cardiologist a 3rd, 4th, 5th time? Well, no problem. The first 2 times, we'll pay the $150 rate. From every time they're on out up to your 20 doctor visits, we'll pay the $120 rate. Okay. We'll kind of skip down here just a little bit. Let's look at MRIs, PET scans, CAT scans, or other nuclear testing. So this is going to be our MRIs, PET scans, CAT scans, CT scans, things like that when it's done on an outpatient basis. So we've already taken a look at our inpatient where we pay double what Medicare would pay. Now, if we get MRIs, PET scans, CAT scans, CT scans done on an outpatient basis, we pay $500 here. Okay. So on this section, I always like to educate my customers when I'm actually going through this brochure. I always like to let them know, hey, if you have any kind of things come up like this, if your doctor says, hey, we need an MRI or hey, we need a CAT scan, the best thing to do when they prescribe that to you, call me as your agent. Howard, of course, we're going to show you guys how to do this as well. So you guys understand how we're doing this and looking at these different prices. Right. But we'll actually find a better facility or a more cost-effective facility here for you. I actually had a couple weeks ago, they had called me and said, hey, my wife needs a brain MRI. And I said, okay, did you get any kind of pricing or anything? They said, well, they said if they run it through insurance, they're going to bill us $1,400. But if we pay cash, they'll only charge us $900. Do you think we should do it? And I told them, I said, look, we know your benefit's $500 on this. So I would tell you, you can do that, but you're going to get out of pocket $400. Let me take a look over here. And I went directly to our website and I looked up under some of our resources. We have a tool on there where we can actually look up different facilities in different zip codes and areas as far as pricing. And I was able to find them the same exact brain MRI with no contrast that they were looking for in Fort Worth for $425. So not only are we saving them all the monthly payments that they're saving from switching over to us, but then we're offering that concierge service and we kept them within their benefits. So not only are they going to get their MRI paid for, they're also going to get paid an extra $75. So I think, let me back up here for 1 second. I think one thing I failed to mention on all of our outpatient benefits. On all of our outpatient benefits, we don't have any deductibles that you have to satisfy. There's no copays, there's no co-insurances or anything else. It's very straightforward. We tell you exactly what we're going to pay for your stuff here. Okay. And so I think I missed that part.
Yeah, yeah. So no deductibles on any of the outpatient procedures, correct? Is that
correct?
Okay.
Correct.
All right. And and one other question too on the when we were talking about the MRIs and PET scans and that example that you were just using, if they said, hey, it's We'll take, you know, it's $900 cash price. If you turn around and told that same provider, hey, my plan only pays $500. I mean, they could take the 500 and just call it even at that point too, right? Because they're going to know they're going to get the money, right? So, try negotiation.
They could, especially whenever you're able to tell them, hey, I have another facility going to only charge me $425. You know, once you start doing that, you know, they're more often to work with, more likely going to work with you because they want to get your business versus having to go somewhere else.
Right.
You know, me personally, I'd much rather get $500 put in my pocket than to get zero put in my pocket. So we've seen them more often than not they're willing to work with our customers.
Okay.
So
very good.
Yeah, good question. So, but yeah, that's one thing we always like to instruct our customers. You know, I know because I've been on the other side of things where I wasn't a health insurance agent, and you could tell me something before I was in the health insurance industry. You could tell me something to be in one ear and out the other in 2 seconds after I got off the phone. I would say, oh, I got great health insurance, but I don't know what my benefits are. So I always like to let all my customers know personally, look, save my number in your phone. You will have questions. Call me. I don't mind it at all. You know, 9 times out of 10, when a customer is calling me for something, it's normally not even a service question. It's normally, hey, my sister wants insurance, or hey, my brother wants insurance.
Right.
My parents need insurance. My kids, whatever it may be. The mailman, I've gotten people say, the mailman needs insurance, and he talked to me about it. So I always tell people, look, save my number in your phone. It's going to get, you know, more traffic coming into you guys as well. So that's another beauty of the type of policy we have here. So we'll take a look at our lab work, our lab indemnity benefits. So our Plus plan, we pay $80 for lab works. So again, like I was saying, if I go into my doctor's office and I'm not feeling too hot, and he says, well, let's take some blood work to see what's going on. Well, my plan's going to pay $120 for the actual visit to the doctor's office. And then my lab work is going to pay an additional $80. So of course, all these benefits will stack. So I would get a total of $200 worth of benefits. So one thing I always like to let people know on LabWorks is the number 1 and number 2 lab in the nation are both Quest Diagnostics and LabCorp. 93% of all labs go to Quest Diagnostics or LabCorp, and both of them are going to be a network. So your clients are going to receive all the network discounts and everything associated with all of that. And then after the network discounts, we're going to pay the $80 for that lab work too. So typically, I personally like to use Quest. I feel like I've always gotten better discounts with Quest. On average, I've seen them usually range around 85% on the network discount. And with LabCorp, typically I see the discount hovering around 65%. So you can always ask your doctor. They'll know what's going to be the best lab to use in, you know, whatever situation, whatever type of lab test you're doing. Like I know lipid panels sometimes may be cheaper with LabCorp. But after all those network discounts, our plan's still going to pay $80. Okay. We'll take a look at the next thing we'll take a look at here is going to be our emergency department indemnity benefit. And so this is actually really cool. So this, aside from the hospital admission benefit for first day inpatient, this is one of those other benefits that I believe, to my knowledge anyway, we're still the only company that actually has this. And so what we're saying here is we'll actually give you $300 for your facility fee and $300 for your professional services to help you along with your deductible. Back up. We'll give you $300 for your facility fee and $300 for your professional services to actually get you checked into the emergency room.
Gotcha.
So with my old school Blue Cross Blue Shield plan, again, not only was it an HMO where I had to go to a specific hospital, on top of that, I used to have to pay a $950 copay just to get into the emergency room. So if I didn't bring $950 cash, they're going to say, I'm sorry, you're going to have to go find it. Right here, what we're saying is we'll actually give you $600 to get you help, get you into the emergency room. So that's a really cool, powerful benefit there. Next thing down here is our urgent care center benefit. So we actually get 2 of these per calendar year, and we'll pay $300 for each one of your urgent care visits. So again, we understand the average urgent care center visit is typically going to be about $120 to $150. So the reason we're paying $300 here is, of course, it's saving us money from you not going to the ER with a common cold. We're trying not to overpopulate our hospitals, or I should say overcrowd our hospitals, especially right now with the COVID-19 going on. They're very concerned about, hospital space. So we would rather give this little extra money to you guys as policyholders and really take care of our customers and go that extra mile for them. So now this one works very much like the specialist benefit. So if you need to go a third, fourth, fifth time, again, no problem. We'll pay $300 the first 2 times. And then every time thereafter, we'll pay the $120 benefit. So the reason we started doing it this way is we've noticed a lot of people have started using the urgent care as a primary care physician because we've started seeing more and more people say, oh, my doctor said it's going to be 2 weeks for me to get in, and I'm sick today. So again, we have that access as well.
Okay.
So
do you also have a telemed feature?
We do. And I'll get to that just here in a second. I'm going to go over these preventative care benefits.
Gotcha.
And then I'll actually go over the telemedicine that we have. The preventative care benefits we've got here. So this is going to be the one thing on the policy, other than the 1-year pre-existing waiting period. This is going to be the only other thing on the policy as a waiting period. They'll have a 60-day waiting period from the time the policy starts until we'll actually have access to our preventative care benefits. All the other benefits will start from day one. Just the preventative care benefits has that 60-day waiting period. So, but after that first 60 days, we'll get $250 per year for mammograms. Okay. And again, these are per person benefits. $250 should be plenty for mammograms. We know plenty of different places here in the DFW Metroplex that charge $99 for a 2D mammogram and $134 for 3D mammograms. So again, $250 should be more than enough on this. I always let all my customers know, look, when it comes to these mammograms, let us know. We'll hook you up with the right facilities. We'll give you all their different coupons, anything like that that may be associated that you may or may not need, just to make sure they got that access. Now, the colonoscopy benefit, I usually kind of gloss over it. Do you want me to kind of go into that, Howard?
Yeah, just go ahead and touch on it if you don't mind.
Okay. Yeah, so our colonoscopy benefit, you'll notice here it says we have a colonoscopy without finding any polyps. So years 1 through 3, we pay $500. The 4th year and on, we'll start paying $750. So you do notice it says without finding any polyps. Okay. Normally, colonoscopies are going to be considered preventative care service. That's why it's listed under our preventative care benefits here. Now, here's the thing. In all my years' experience of being in the insurance industry, I've never had someone tell me, oh, I've not had 1 polyp or 2 polyps or 3 or however many they've had. And so what happens after they actually go in and they find polyps during the colonoscopy, then what happens is they have to actually surgically remove the polyps while they're already in there. And so what happens is we'll actually pay our surgical benefit. Because what happens when they find polyps, it goes from being a preventative service to actually being a surgical procedure. So typically the benefit that I'm seeing people get paid out on for the total colonoscopy is usually right around $4,010. We do know the average colonoscopy prices. I know some people say it's $2,200. Typically I see it about $2,700 to $3,200. But still, with $4,010, you should have plenty of money to take care of that colonoscopy there. So that's how our colonoscopy benefit will work for those who are actually asking. And but for all of our other preventative care services, we'll pay an additional $250. This can be things like well checks, physicals, blood work, things like that. Women, when they do their pap smears, we'll get another total $250 here. So kind of rule of thumb here, men and children are typically getting $250 per year. And then women, because they do their womenly checks too, they get $250 plus $250 for a total of $500.
Gotcha.
Okay. So Howard, if you want to scroll down a few pages here, or I guess flip pages, I'm not sure how it is, you should see at the top, it will say Teledoc. Right here.
Right there. Okay.
So this is actually the telemedicine that we actually have. It's Teledoc. To be honest, Teledoc's probably my favorite feature of the entire policy, just for the absolute ease and convenience of it. You have unlimited usage with Teledoc. For those people who are not familiar with Teledoc, it's a virtual doctor visit. I kind of describe it like the Amazon Prime of doctor visits. And So what you can do is you can call, or what I personally do is I FaceTime with a doctor. And I say, hey, look, I got this, this, and this going on. These are my symptoms. And very quickly they can say, okay, sounds like you got a flu, you got the cold, you got strep throat, what have you. And they'll call in a prescription no matter where I'm at. If I'm here at home, they can call in the pharmacy around the corner from me, or if I'm on vacation, they can call in the pharmacy over there. Wherever I happen to be, I can utilize my Teladoc, and it's got unlimited usage, 24 hours a day, 7 days a week, 365 days a year. This does not count towards your 20 doctor visits that you already get. So, that's probably one of my favorites. Being a business owner myself, we don't get any kind of sick days off. So we just gotta keep moving. So I usually, if I don't feel good, I'll actually just call Teladoc versus trying to call and figure out if my doctor has any openings or if they're booked for 2 weeks or what have you. I can just call Teladoc and they can give me any kind of prescriptions I need as long as they're not controlled substances. So again, we do use the largest PPO network in the nation, run through MultiPlan or PHCS, with over 882,000 access points in all 50 states. And then Cares 360, like I kind of touched on them a little bit with the PowerPoint.
Right.
They're our bill negotiator, so they can help you negotiate bills. Typically, we like to show all of our agents how to actually do some of this legwork anyway. I usually will bring Karis in as the big guns if I need something for like a real big procedure or more like a post-claim negotiation where, you get a predatory bill in the mail. I'll call Karis and Karis will handle it usually for us.
Right.
But yeah, I mean, other than that's pretty much the quick version of the plan.
Okay. Well, very good. Well, I appreciate you taking your time to do that for us. And what I'll do is I'll send you a link so you can have.
Yeah, definitely.
Yeah, I'll send you a link too, so that way if somebody says, hey, I'm gonna miss your presentation, you can say, here, watch the link, and they can learn it on their own.
Okay.
There we go. So.
Yeah, and like I said, we do have other training videos and things like that. It's more in depth. It's the actual presentation we actually give for our clients. So when it comes to actual training and stuff like that, we can give it a 20-minute video. And they can actually go through it, and they can kind of memorize the entirety of it.
Yeah. Okay.
So,
well, very good.
We also offer weekly trainings and things like that every Friday.
Okay. Well, very good. Well, I appreciate your time, Ben.
So
thanks for doing this for us.
Yes,
I appreciate
sir.
it.
So, yes, sir. If you need anything else, just let me know.
Yes, sir. Very good. Have a good day. All right. Thanks.
You too.
For more information on this and other group health products, remember to subscribe to our channel or give us a call at the General Agency at 972-466-2915.